everyone, and thank you for joining us today. Today, for whoever's joining us for the first time, it is my pleasure to welcome Mr. Vijai Mantri, who's a seasoned investment professional with a distinguished career spanning over 3 decades. So, he began his journey with Aditya Birla Group and was a founding member team at HDFC Mutual Fund. Over the years, he has also held several leadership positions, including the CEO of Deutsche Mutual Fund, MD and CEO of Pramerica Mutual Fund, and CIO and co-founder of GRL Money. And currently, he is the CIO and the founder of Vijay Mantri Financial Services. So we all know India has been one of the strongest performing equity markets in the world over the last decade. Yet some of the world's most innovative companies and investment opportunities continue to exist outside India. So the question is not whether India is attractive. The question is whether a portfolio can become stronger by thoughtfully adding international exposure. So today we are going to discuss about international investing through three lenses, which is opportunity, volatility, and perspective. We'll explore where international investing can add value, the risks that come with it, and why some of the world's most successful companies have experienced drawdowns before generating returns as well, and how investors such as you and me can participate globally while managing risk responsibly. So, should we invest internationally or no? With that, I invest Mr. Vijay sir to share his thoughts. Over to you, sir.
Thank you, Sanikant, and thanks to all the viewers for joining in. Really appreciate your taking time out on Saturday morning. So, what I intend to do is to run you through various markets, global market, how they have done over the years, then make comparison with Nifty, and will take you in the end what is happening in the US. And it is very important that for investor to understand that map is not a terrain. So when you say return, you are just looking at the return. You are not looking at the terrain. Basically, you are not looking at the journey. Sanika, थोड़ा sound echo हो रहा है. If you can look at this.
Sir, it is clear for me.
No, for मेरे यहाँ echo हो रहा है. चलो ठीक करो. So here we go. First time looking at Taiwanese market. So if you look at this slide, so Nippon launched a Taiwan fund on 14th December 2021. And so I looked at that Taiwan's fund NAV and also looked at the NAV of Nippon large cap and a small cap fund on that particular day. After 10 months, the Taiwan's fund's NAV dropped to 6 rupees, a massive 40% drop. And during the same time period, the large cap NAV was up around 4 to 6%, and the small caps NAV was up around 7-8%. Not only that, till April 2025, the NAV of Taiwan fund has moved from 9 rupees 76 paisa to 8 rupees 88 paisa. So what you see here is that a fund which got launched in 2021 after almost 3.5 year plus is sitting on 12% losses. During the same time period, the NAV of large cap has moved from 50 rupees to 80 rupees. So that is 60% gain. And the small cap moved up from 85% to 145%. That is around 60 to 70% gain. And then from 8 rupees 88 paisa, the fund NAV is 36 rupees. So just more than a year's time, the fund NAV has gone up 4 times. During the same time period, large cap has hardly moved, maybe 10%, and a small cap also moved around 10%. So this is the kind of performance we have seen in Taiwan, one of the most attractive market for many people. But just understand the journey of this fund. So if you had a 1 lakh rupees, you invested 1 lakh in Taiwan fund, 1 lakh in large cap fund, 1 lakh in a small cap fund. After 1 year, this 1 lakh, after 4 years, this 1 lakh is 88,000. This 1 lakh is 1 lakh 60,000. This 1 lakh is 1 lakh 70,000. We should be able to live it through this painful period to get this 1 lakh then become 4 lakh rupees. So that is the kind of thing one need to keep in mind whenever we look at international investing. The journey is very important. Now look at, for instance, now we look at the next country. So I looked at HSBC Brazil fund, and if you look at data, HSBC, if you this is the HSBC's large cap funds NAV, this is HSBC's Brazil's funds NAV, and this is HSBC's flexi cap fund NAV. If you look at January 2025 to June 2026, or approximately 17, 18 months, the NAV of flexi cap remained flat. The NAV of large cap is down 5%. The NAV of Brazil fund is up 76%. So this is what we have witnessed in recent past. But it is very important to look at what happened, what was the journey. So in April 20, the NAV of large cap has moved 111% from April 20 till Jan 25. Brazil fund was up 15% and flexi cap was up to 61%. Prior to that, during COVID period, the large cap fund NAV remained almost flat. The Brazil fund NAV fell 50%, and the flexi cap fund NAV fell 70%. During this period of Jan 2016 to June 2020, Brazil fund was up 57%. Sorry, large cap up 57%. Brazil fund up 150% and flexi cap up 40%. But after the launch of this fund and after 5 years, almost 5 years, the large cap NAV is up 39%, flexi cup NAV up 77%, but this fund's NAV is down 60%. So it is if you started in May 2011, interestingly around the same time, The Economist magazine came out with an article about Brazil and the headline about the Brazil that it is the next tiger. And HSBC Brazil launched the fund at around the same time. And if you invested in that fund, 10 rupees NAV became 10 rupees, 19 rupees after 15 years. During the same time period, the large cap has gone up 4.5 times and the flexi have gone up around 6 times. And there was a period, this period and this period, where the investment performance was much, much better. Here is a KOSPI. This is a Korean index. And what I looked at here is that from May 2009, when the KOSPI was 1396, till May 2026, we look at monthly rolling return, one month, then monthly rolling over a 1 year period, monthly rolling return over a 3 year period, 5 year period, 7 and 15 and 17 since date. And we did a comparison how many times KOSPI outperformed India. So on a 1 year period, 24% time, in a 3 year period, 13% time, 5 year period, 7.7% time, 7 year period, 9% time, 10 year period, 2.5% time, and 15 to 17 year plus, Korea never outperformed India. And this was the outperformance of India. Interesting to see this data. May 2011, the KOSPI was 2,100. May 2025, the KOSPI is 2,577. So in absolute term, over a 14-year period, the gain is 20%. Absolute term over a 15-year period. During the same time period, Nifty moved from 5,749 to 24,334, approximately 4 to 5 time appreciation. But what happened here? In 1 year period, the KOSPI moved from 2,577 to 8,086. Unprecedented growth we have seen, and it's driven by two companies. We'll talk more about this. This is the performance of Nippon Large Cap Fund, and comparing Nippon Large Cap Fund with Nippon Japan Fund and Nippon Small Cap Fund. The Japan Fund got launched in just a sec in 2014, and the NE was 9 rupees 93 paisa. Small cap NE was 1878. August and large cap was 1980. So we did a comparison of various time periods. From October 2022 to June 2026, large cap is up 66, small 90%, and Japan fund is 109%. November 2021 till date, large cap up 68%, small cap 110%, small Japan is 51%. And from the launch till this period, large cap 37%, small cap 811%, and Japan is 175%. And if you look at comparison from August 2014 to November 2021, large cap 160%, small cap 334%, and this fund is up 82%. And if you look at November 21 to October 22, 1%, 10%, 28%. So it is very important to see the journey. What we have witnessed in last 1 or 2 years, 1.5 years, is a complete AI story. And anybody who's participated in AI has benefited significantly. What we have witnessed over the last 1 year, SK Hynix is up 1,000%. Micron is up 900%. Intel is up 466%. Samsung is up 468%. AMD is 357. Applied Material 182%. ASML 116%. Taiwan Semiconductor Manufacturing Company 112%. Broadcom 85%. And Nvidia 63%. And these are top 10 companies which have a play on AI chip semiconductor. But what is most fascinating to see, what is the expected profit growth of these companies over the next 2 year period? SK Hynix is expected to grow its profit not by 7.5% percentage, but 7.5 times. Micron 8 times. Samsung 8.6 times. AMD 5.3 times. Nvidia 3 times and Broadcom 3.5 times. So this is the kind of expansion is built on the profit growth of these companies. Now I'll run you through the history of these companies, how they have performed. So here we look at first company is Micron. So if you look at Micron's performance, the stock was at $3. From $3 in 1984 till 2008, the stock price moved up but finally dropped back to $2.6. So after 24 years, the stock remained by and large the same level. And if you see from in year 2000 when it touched $88, it dropped to $8 and 90% drop. This stock has seen similar kind of growth from 96 to 2000, what it is witnessing right now. So this is a 24-year period where this stock does not deliver any return. If you look at the price here in 1996, uh, uh, sorry, uh, if you look at the price here, sorry, here, 1996, the stock was at $9.4. From there, next 20 years, the stock does not deliver any return. Here, if you look at 4 year period from 1995, sorry, 19, 14-year period, $39 to $32. And then from $77, is shoot up to $1,035. So this is the kind of thing we have witnessed in Micron, which has delivered the best performance in last 1 year, 1,000% up, 10 times up. But look at the journey of this stock. Same way you could look at performance SK Hynix. If you look at this data from 2003 till 2008, for a 5 year period, the stock is actually negative. From 2007 at 37,800 till 2016 for a 9 year period, the stock has not delivered any return. And these are the various drawdown in the stock prices. And from here, the stock has gone up to 23,600. So that is the kind of appreciation we have seen in SK Hynix, but we just come through this journey. Then you look at Samsung, this is the biggest slowdown which we have witnessed. Okay. Look at the prices here. In 2017, it was 55,000, and 2025, after the gap of 8 years, it is still at 56,000. If you look at 2021 to 2025 for a 4 year period, the stock is actually down. 5 year period stock is actually down from 82,000 to 58,000. And from here, it shot up from 59,000 to
Uh,
3,60,000, almost six times growth. Similar the story of applied material, same story.
sorry. Sir, just change your network and check because I think some people are still like their voice is not clear.
So I'll read on, okay?
I think you will have to change your network like Wi-Fi. Either connect to mobile data because I think few people are not able to hear you clearly.
So I present through mobile phone and speak through, right? That's better.
So that is why your voice is echoing.
But I'm not, I'm use my mobile phone. Okay, fair. So what I'll do, Sanika, uh, yeah, I will speak through my mobile phone and make
Okay, we
presentation
can.
through laptop.
Okay.
Recording in progress. It's okay now?
Just I think for me it's okay. I'll just check if.
Sanika, you have to make me host on mobile.
Sir, it's better now.
So made you the co-host also. Sir, everyone is saying it's okay now. We can continue.
So you're muted, I think, still.
Telling is host. Okay, now. Is okay now?
Yeah, sir.
Or presentation is visible?
Uh, no, not visible yet. You have to know.
Is it okay now, Sanika?
Yeah, sir, visible.
Okay, so what I'll also do, I'll just hide myself. Okay. So, if you, for instance, if you see the Samsung's price movement from 2021 till 2025, it didn't make money for 5 years, it didn't make money for 8 years, and from here, it shot up from 58,000 to 60,000 USD to, sorry, a local currency to 360. So, that is the kind of thing we have seen in Samsung. And this is a story of applied material. These are the various drawdown. And this was a time period in which the stock has not made any money for 4 years, for 18 years, for 3 years, for 5 years. So there was a various time period. And if you look at ASML, it's same story. For 7 years, the stock has not made money. From blue, you can see the price movement. Here is a green. You can see for 12 years, the stock has not made money. For 5 year period, the stock has not made money. From 2021 to 2025. And if you look at the Broadcom, the story is actually identical. These are the various drawdown we have witnessed in the stock, and there was a time period where stock has not made money for a considerable time period. And here is the story of Nvidia. Again, for 11 years, the stock has not made money. And then suddenly after this AI and so these are advantage and disadvantage of investing in technology driven company. They grow so fast in such a short time period, and the drawdowns are equally sharper. And if you look at Korean market, is the way you slice the data, this is what you get. If you see from 2019 to 2024, Nifty was 11.8% CAGR. These returns are in USD, and Kospi was 6.9%. 2009 to 2026, data just flipped. Uh, Nifty is 9.2%, and Kospi is up 12.2%. And if you look at SK Hynix and Samsung's are 40% of Kospi, and Korean market ranks and move from top 14 into world to top 6. And if you look at Taiwanese market, TMC is 40% of Taiwan index, and Taiwan market cap moved from top 10 in the world to top 5 in the world. So what you see in last 14 or 18 months is approximately 60% of direct AI and chip play is taking all the profit and taking away all the cash flows and taking away all the investment and generating all kind of return. We haven't seen this kind of market concentration ever in recorded human history and at this scale. Uh, and if you look at Micron is expected to make $100 billion in 2026, and this company made a $5 billion loss in 2023. If you look at SK Hynix, it is expected to make $130 billion in 2026. It made a loss of $6 billion in calendar year 2023. If you look at Korean market, it is expected to deliver 156% EPS growth for the market as a whole. One more product I look at is Invesco Global Consumer Trend Fund, which got launched in India. It got launched in 2021. Nvidia and Amazon were part of the portfolio. I personally invested my own money, and I told a lot of my clients to invest the money. By 2022, the NAV of the fund dropped to 5 rupees 64 paisa. By Feb 2025, the NAV moved to 11 rupees. By April 2025, the fund's NAV moved to 7 rupees 12 paisa. By October 25, the fund's NAV moved to 13 rupees. And by March 2025, so this is actually 2026, the NAV dropped to 10 rupees from 13 rupees in just 6 month time. And in June 2026, the NAV moved up to 13 rupees 28 paisa. Right now, it doesn't have Nvidia, but at that time, it was the Nvidia part of the portfolio. This fund has delivered more than 40% in last 1 year, and 3 years, the money has doubled. But let's keep in mind, this is the journey of this fund. SK Hynix and Samsung will pay 435 expected to pay $435 billion of tax, which will be 50% of South Koreans' total debt. That is a kind of dominance these companies have. And by the way, people keep talking about Korea and Taiwan, but the market which outperformed Korea and Taiwan are actually Ghana and Venezuela, which are old commodity market. So we have seen this kind of craze in the market. We have seen VCP craze in 2019. We have seen a small cap craze in 2024. Gold, silver in 2000 in Fab 26. Indian defense in 2024. BAP investing where you buy anything at a whatever price in 2020. We have seen China internet play in 2021. We have seen infra boom in 2008. We have seen real estate in 2012-13, and we have seen specialty chemical in 2021. Whenever something goes up, the way it goes up, people expect this to continue, and they also expect nothing else to grow. And that is the reason that lots of money move into these ideas. Here is what is happening to the US market. These are the various total money raised through IPO in US market, highest being $142 billion in 2021. SpaceX got half of this just yesterday. That is the kind of craziness we have seen. SpaceX IPO is $75 billion. Now we look at Anthropic, Google, Open AI, also, coming out of the IPO. The biggest IPO till date before SpaceX was Aramco of South Arabia, but that was open globally. The biggest IPO in US was Alibaba, $22 billion. and this is three times bigger, and this is just the beginning. Now, just put this in context. Approximately $400 billion of money would be raised by these companies, Anthropic, Google, OpenAI. You also need to keep in mind that 10% of the total taxes of US administration come from capital gain tax. Also, keep in mind that inflation is rising. The debt burden and the servicing of debt will become more and more critical and difficult for US. So US is struggling to get more money. These companies are crowding out every other else as far as availability of the money is concerned. The number of IPOs which got raised money has reduced substantially because large part of the money is going toward these companies. And this is the data for last 1 year of performance in USD, last 3 year performance, last 5 year performance, last 10-year performance, last 15-year performance, and last 20-year performance in USD. Korea was nowhere in the ranking few months back, but Korea suddenly jumped and became the third best or fourth best market. Best is US over 20-year period. Second best is Taiwan because semiconductor company. Third has become Korea and India is fourth. So India was vying with and fighting with US. I'll show some data about India, China, and USA in my slide. So this is what keep changing. If you slice this data different time period, you will get different results. This is MSCI emerging market weightage of two country. Uh, China topped that in around 2020, and then it from that it was around 40%. Then it is falling. India topped around here. It was around 18-19%. Has come down to 11%. It's dropping. China is also dropping. If you believe that China is one of the most important superpower in the as far as economic thing is concerned, economic haste is concerned. Why the China's weight is coming down? So sometimes the economy can act differently and the market can act differently, particularly for China. So this is for the China, and this is the emerging market allocation to China. So the point, and then the China has delivered on the worst performance. So the FI's ability to get things right is can go horribly wrong. Look at this chart. This will explain that what was the allocation of in the emerging market. China had 40%, and it is not the best performing market. So when we keep talking about FI players, keep in mind the FI has historically has gone horribly wrong in allocating money to various countries. This is the India's weightage in emerging market. It has come down from 19% to below 11%, which I don't think is fair allocation. This is India's allocation to all country world index has come down from 2.1% to 1.3%. Please keep in mind India contribute 3.5 to 4% of world GDP. I don't think it will go down further from these level, in a significant way. This is India's contribution to world market cap. So India's contribution to world market cap is still 3%, but India's weightage in the index is 1.3%. So this will change uh, over a period of time. And we keep talking about money being taken out by FII. Korea was one of the best performing market. Look at the money which has been taken from India's 25, $26 billion in 2026. But look at kind of money was taken from South Korea. $64 billion has been taken out from South Korea. And in the March alone, $28 billion has been taken out from Taiwanese market. Only in last 2 months the number has changed. And if you look at this data, there was various time period where the FI has continued seller of Taiwanese market. Starting from here, $12 billion, then 9 inflow, then 15 outflow, 15 outflow, 44 outflow, 18 outflow, 7 outflow. Same with South Korea. If FI was so smart, they should have been investing more money here rather than taking money out. But they haven't done that. So just keep in mind that many of these institutions are basically performance chaser, and index is essentially a momentum chasing phenomena. If some stock does well, the price goes up. If the price goes up, the weightage in the indices goes up. If the weightage of index goes up, more allocation goes to those stocks. So actually, index investing is essentially momentum chasing. This we have witnessed in various markets. Uh, Look at what is happening in US market. The five companies to rate approximately $700 billion. Two-thirds of S&P's 500 profit is coming from 68 direct AI play. Very concentrated market. Express X will trade at 90 times its revenue at $1.75 trillion market cap. But now the market cap is looking like much worse. Sorry, much bigger. Okay. Specs revenue has grown up at 100% CAGR till 2000, has to grow at 100% CAGR from here onward. And same with OpenAI. So just keep these contacts in mind when you look at, participating in these ideas. So this is a part of my presentation. I'll share some more data with you. Just give me some time, please. Now, suppose you see this slide. So this is actually the EPS revision of Korean market. See how the EPS got revised. It's like somebody shooting an arrow straight up in the sky. So that is a kind of profit growth we witness in this market. And there's a typical boom and bust cycle get played out historically. Right now we are here, approximately here. So just be mindful of what is happening to the US market. And equity ownership of US investor is actually at historical high, and funding through margin debt is again at historical high. As a percentage of the economy, it is above the level of year 2000 internet bubble and 2008 GFC. Margin provided by brokers to do margin trading is actually at historical high in US market. Number of leverage ETFs. So this is the margin trading funding. This is a leverage trade. If you look at leverage trade again, number of leverage ETFs has shot up in US market, and these are various one stock ETF which take 5 time bet on AMD, 5 time bet on Amazon, Coin, Google. They have gone up substantially. So in US, their ETF allowed which take 5 to 6 to 5 up to 5 time bet on, they borrow money and then they invest in these stocks. If the going is good, the numbers look fantastic. But the moment something goes wrong, your entire capital get wiped out. So point we are saying that the speculative money, huge speculative money, is going into in the US market. And what we are finding very, very interesting is this flow, this chart. You can, the income and expenditure and profit and loss account can hide, but balance sheet cannot hide. So what we're witnessing in US is very strange phenomena where the revenue, somebody who's selling a product is booking that as a revenue. Somebody who's buying the product is not treating that as expenses but capex. So what we are seeing historical profit numbers, but one of the lowest number as far as free cash flow is concerned. And this is again the free cash flow versus EPS estimate. And this slide I showed to you guys, and these data we have presented to you. If I've, so we spoke about all that. So now we open the forum for questions and answer. My one line submission to all of you, just keep in mind the map is not terrain. Don't get completely blinded by return only. Always look at investing in asset category where 10-year investment performance is below historical level. Wherever you see 10-year CAGR much higher than historical averages, the bubble is building in that asset category. Right now, last 10 years Nasdaq return is much higher than what witnessed in 1920 in Dow Jones, in 1950 in S&P, and almost closer to Nasdaq in year 2000. So it is not that the market may not go up, Nasdaq may not go up, Taiwanese market, Korean market may not go up, but the margin of safety is not in your side. The odds of making money is not in your side. Entering these market is like you are entering a godown full of inflammable and you're carrying a matchstick. You still may come out alive, but it is too risky a bets to take. In my opinion, much better thing to do currently to invest in the one of the most hated investment asset category right now, which is India. And keep in mind the performance of Indian market come from varieties of sector. BFSI, and within BFSI, we have private sector bank, public sector bank, capital market intermediary, health insurance, life insurance, NBFC, gold finance company, mortgage company. You have a healthcare, you have manufacturing, you have all varieties of organizations. So it doesn't come from one particular sector of the economy where the profit growth is when the range is narrow, the growth can be much faster. India offer you much broader range. That's why the growth can never be as fast as we witness in this country. But similarly, the drawdown is also not as severe as we witness in these countries. Few more data, if you allow me to show. That's fine. We're done with this. Okay. So over to you, Sanika. If people have question, more than happy to answer.
Yeah. Mr. Samir, you can unmute yourself.
Thank you, Vijay sir. Good morning, everyone.
Good morning. Good morning.
Sir, one question is there, on your screen sharing, you mentioned that South Korea, it's 64,000 outflow for the FII. So why we are worried about the Indian market? That's only the 25,000 is outflow. So can you just highlight more? Maybe the question is not appropriate.
So why you're
but
saying
you
that
understand what I mean to say.
Korea? What you're saying that Korean people has FI has taken out $64 billion from Korea. They've just taken out $25 billion from Korea, but still Korean market is doing much better. Why worry so much about? I completely agree. Going forward, the dominance of FI will continue to come down because the FI holding has come down from. Uh, I will tell you the number, exact number. I should. Okay. The FI holding has come down from 23% to 16%, and DI holding has gone up from 10% to 21%. And every passing day, the numbers will come down. Why the numbers will come down? Because one, we have a SIP. Second, we have EPF for money. Third, we have NPS money. Fourth, we have PMS. Fifth, we have AIF. Then we have mutual fund, normal buying, selling, and then we have insurance. So institutional participation to retail investor is pretty huge in Indian market. So dominance of FI will go away. Why we start worrying more about FI? Not because the FI taking money out, but it started playing with Indian rupee and also combined with what happened right now in Iran and Israel and USA. And because of a spike in energy prices and gold appreciation. So four, five things happened simultaneously. The energy prices shot up, uh, the gold prices went up, there was a huge concern on the supply on fertilizer, essential chemical, and then the FI was taking money out. So all that has put some stress on INR. And that's why there's much more talk about in recent past about FI flows. But once the conflict over Iran and Israel get over, you will see at least 10 to 15% jump in the Indian market. You'll also see energy prices coming down. And already we are saying with the FCNR deposit being opened by RBI, is a huge opportunity for NRI to participate in India and gain significant amount of tax free with leverages. It can go up to 10%. So I think the rupee will manage, and then when the rupee get managed, I think the FI return in INR will not look as bad as it looked in recent past.
Thank you, sir. Can I add on one question, or is it?
Yeah, please, no problem, absolutely.
So, as you sir said, that the Indian government putting the tax free on the FII, but on the debt, not for the equity. But that percentage is hardly 0.5 or 0.3%. So it's not a benefit to even the NRI also, or even it's not good for the Indian market.
So,
As per the number, I have something 13.5 billion approximately. So only 0.5 is the percentage is there. So measure is on the equity market. So whatever the steps, I mean to say that whatever the steps taken by the Indian government, it's not useful to the India for the India side as well as for the NRI FI market also.
so I think it is more signaling. It is so what happened in the market, a lot of speculation activity happen, and a speculator speculate what other speculators expecting to speculate. So what happened when somebody these steps are taken? These are more indicative kind of stuff. When these stops are taken, okay. So what happened at that time? That the signaling is going that we are looking at doing something which will not allow our country's currency to depreciate the way it is depreciated in past. So I think it is signaling is more important than absolute amount.
Thank you very much, sir.
Yes,
So,
Anit?
yeah, Mr. Vikram has asked, is it good to invest in ETFs? If yes, which one would you recommend from the US market, or how to identify a good and a reliable ETF?
So for that, you need to consult your mutual fund distributor or investment advisor. It is important you walk through those. As far as global ETF is concerned, again, it is not a recommendation, not at all. Whatever I'm saying on this platform is not a recommendation to do buy something. Do your own work and figure out. But what we are saying is that if you look at global healthcare, the global healthcare stocks are available at very, very attractive dividend yield. For instance, if you look at Pfizer, Pfizer is available close to 6.5 to 7% dividend yield in USD. So consult your mutual fund distributor. Similarly, in our opinion, in India, BFSI, healthcare, manufacturing, power, these are fantastic long-term 10-year theme. Play those theme, I think is much better.
Sir, is there any chance India underperform long term? Example for 5 years, already 2 years over now.
Yes, very much possible. India can underperform. And the underperform doesn't come every year. The underperform come maybe in India may outperform for 4 years. And suddenly in 1 year, other market outperform so great and Indian underperform. So this could happen, which is we are witnessing right now. Just 2 years back, India was outperforming most of the market. It just because of last 2 years performance, even last 5 year, 10 year performance are not looking good. So this will happen, but it can also flip immediately. So don't expect these things not to happen. But if something is underperformed, then to expect it to underperform more, the odds are much lesser. If something is actually outperforming significantly at that time, the odds of that thing continue to outperform goes up. The odds of that asset category to underperform increases. So right now, India's odds of underperforming are much lower. Other countries' odds of outperforming are much higher. And just keep in mind, things change so dramatically. And I'm not making a political statement, but just remember what happened in West Bengal. I'm not saying which is right, which is that is none of my job. But just look few months back, what was the situation and how dramatically the situation has changed in 45 days time. Same thing happened in the market as well. And just look at what was we are discussing in Fab Jan 2026. Everybody was talking about कि सोना 2 लाख हो जाएगा और चांदी 10 लाख हो जाएगा.
Got it. So thank you. So next question is, as a SIP investor, what percentage should we allocate to global investing? Someone who's a 30-year-old. And also, sir, use little bit of Hindi so people can also understand.
तो मेरे हिसाब से आपको ग्लोबल एलोकेशन 5 से 10% करना चाहिए अपने पोर्टफोलियो का. और वो आप बट आपका विजन कम से कम 10 साल का होना चाहिए. और अगर आप मेरे हिसाब से पूछो तो वो allocation largely दो country में जाना चाहिए. एक जाना चाहिए US में, because still it is 66% of the world market cap and approximately 28 to 30% of world GDP, leader in soft commodity, leader in technology. So one part. Second part is it may not generate return immediately or may have some challenging time, but China is definitely is in great shape as far as economy is concerned. It may or may not translate into investment performance. So these are two countries you could look at. But again, please consult your investment advisor, stock mutual fund distributor. Anything we speak here is not to be taken as a definitive investment advice.
Mr. Anand, you can ask your question. I've unmuted you.
Yeah, thank you so much. Thank you, sir, for the insight. There's few questions and few doubts which is coming in while we are doing the investing, while I'm doing the investing. One thing is that when the market is going down, we still see there are some very solid companies which are performing very good, and they are able to make still, they can still beat the market, and their profits are still going up higher and higher. And it is also reflecting in the stock market price as well. Now, when this is happening, that it just signifies even if the India market as a broader view is down, there are some very good businesses which are able to make profit. And it is very difficult to identify sometimes even to make money. Like, when we can, is the market is just to make money. But there are different possibilities where we can make money. One is in the mutual fund, which like spreads the whole money in a different baskets, different stock. But in that, definitely we are also witnessing that there are a lot of stocks which are really good. Certainly, and your insight also as well in like semiconductors, which is coming up in Dhalera. There are a lot of new chip making companies which is coming up, chip designing, and which is futuristic. Probably we understand that we do not have any evidence of the whole lot right now, but seeing the market in Taiwan, China, and US, it is definitely going to blow up. Now, my question again also will be, how do we tap these things? What is your insight and suggestions? Because we've got I have like two, three parts of this question. Um, and when we go into this, the power sectors, futuristic stocks, what are the areas, is there any medium where we can use it to invest? Or there are some mutual funds who are also thinking likewise, focused areas. They understand that most of the stocks are still doing well. And I will identify those stocks which are actually able to make money in even in this bad market.
So first of all, we don't recommend any stock buying, and we encourage people not to do direct stock buying because I have witnessed, I've seen so many clients' portfolio. Even if it is your full-time job, you rarely make money. However, there are certain people who can specialize in certain business. Any business, somebody textile business, sugar business, chemical business, they have a deeper understanding, but they are more business analysts than financial analysts, and they see cycle in these businesses. So they can, but they don't trade all point of time. They see the opportunity come once in a 7, 8 years. India, however, is a market which is not a single pony market. We have multiple things going on in this country, uh, and you will see in various sector of the economy, we will do well. Whether it is a semiconductor industry, we have signed deal with Netherlands-based company, and you will see
Right.
more and more. May not start with the top-end chip manufacturing company, but we'll start with basic, and then we move up the value chain the way we moved on auto as well. So I think in India, you will see broader opportunities emerging. I spoke about healthcare, I spoke about BFSI, I spoke about manufacturing, and these power theme and all these things can be played through manufacturing, or can be played through India opportunities, or can be played through uh, power and infra funds, but particularly power fund in India. So you could look at participating through, not through direct stocks.
Okay. Okay. So one more thing is that how do you see right now the IT markets right now is in a turmoil, and how do you see its future? Because it is pretty much very difficult to understand that AI is coming in it has become a disruptive. But there are still news coming in, like, TCS saying, I am going to make equal number of agents as in the number of peoples I'm going to have. And I will also, make more uh, uh, attractive things happening in the company. And same is going with HCL, which is actually going into a lot of chip manufacturing in the manufacturing area unit, which is probably like it is trying to dominate in the semiconductors as well. So how do you see at this point, uh, which is very at a very low price, probably like 5 years low uh, index IT is there?
So my opinion that IT could be a very bold, aggressive contrabat.
Mhm.
Yeah.
So should we invest in that or
Again,
these?
consult your mutual fund distributed investment advisor. Don't take public platform advice uh, uh, because investing is too personal endeavor. So we recommend to our people that sit with your advisor, discuss all these things, basic broad plan, and make an investment policy for your family, and then invest accordingly. Not chasing hot sector. That may sound more tempting, but the real wealth is built through a proper policy and proper plan. So it is like creating a good family portfolio is like building inning. Identify hot sectors like hitting a sixes.
Hmm.
The greatest batsmen are not somebody who hit big sixes. The greatest batsmen are like Sachin Tendulkar, Virat Kohli, Joe Root, Steve Smith, Ricky Ponting. They are not the biggest hitter. They don't have the highest strike rate. But these guys played significant role in taking their team over the ropes. So it is very important you think yourself as a guardian of family and look at what inning you play, where not only what you do is visible to other people, the next generation also can ride on a shoulder. They can also learn from how structurally, not through complete individual brilliance, but how structurally well your investment policy has been, how you've been investing, how the wisdom can be transmitted from you to next generation. I think these are far more important things, but in today's viral world, these things lost somewhere. But the most profound thing in any walk of life is never available on the surface, and they are never actually, uh, you know, are glamorous. So, for instance, in communication, the most important quality is to listening. But listening will never get you good marks, but will take you way ahead in life.
Oh, oh. So
Mr.
one quick question is there. Um, can I continue, sir?
Yes, please.
Yeah. So there we see there is going to be a free trade happening with Europe, which is coming from 2027 onwards. So do you see there are certain things like you've already mentioned manufacturing, and I've already been in line with that as well. And how do you see that this open free trade with Europe will help any sector to literally grow, which is right now at a very lower uh, PE or lower cost?
So when you look at, there's always a primary sector which benefit and always some secondary sector benefit. So, for instance, deal with Europe, UK, and Europe Union will definitely help our textile industry, or leather industry, toys industry, various industry. The secondary benefit is that large pool of resources, people get employed in this industry. So that will be great for consumption. That is great for other sector of the economy. So in India is always, you'll see just not one sector dominating. It is one sector benefiting. So for instance, when IT boom was happening, IT made lots of money for IT shareholders, but IT boom also led to boom in real estate. It also led boom in consumption on various sector of the economy. So India is very fascinating sort of economy that way.
Great, sir. Thank you, sir. Thank you so much, sir. Thank you for your
Uh,
insight.
yeah.
Mr. Om Prakash, I've unmuted you.
Sir, जय श्री कृष्ण नमस्ते. सर फ्रैंकलिन एशियन इक्विटी फंड में निवेश करना चाहिए क्या?
सर अभी तो मैं एशिया में खाली थोड़ा बहुत चाइना को देख सकता हूँ। बाकी मेरी हिम्मत नहीं
ओके सर।
होती है अभी, मेरी हिम्मत नहीं होती है। मैं इसका मतलब ही नहीं रहा आप हिम्मत ना करें, आप कर सकते हैं, मेरी हिम्मत नहीं होती।
ओके सर, थैंक यू।
Sir, we have a question from Mohit. It means diversification through outbound gift city is not much advisable.
So the 3-4 challenges with Gift City product. Number one is taxation. In first 2 years, you are taxed at highest rate possible. Only after 2 years, it get at 12.5%. And 2 year, it is not that you are taking money out, but whatever fund is doing. So that is the one part. The second part I have witnessed in gift cities that it become very difficult to track the performance. Uh, uh, Transaction convenience is not that great. First, you take your INR, convert that into USD, and when you get money back, again convert USD back into INR. You need to go to your bank. There are charges. Also, how do you the reporting become very important? How because I don't think any mutual fund platform have that recording of your transactions and show your portfolio. So it become, in my opinion, very, very challenging. Is better thing to do is to look at investing whatever possibility you have through feeder fund route. Much cleaner, much better.
So what is the overall outlook for India in the short to medium term, like 3 to 9 months? And because 2 years underperformance is a huge negative.
No, not huge negative. The best performance comes only after the long period of bad performance. So today I drop a note from 1992 till 2003 for 11 year period. Indian market does not deliver any return. From Feb 2000 till October 2024 for a 55-month market does not deliver any return. From January 2008 till Feb 2014 for a 73-month period, market does not deliver any return. So don't expect, it is not an FD. So if you expect market to deliver a return every year, market doesn't know that you're invested and it need to reward you. Market only reward patience, and patience get tested when it goes beyond your acceptance limit. So be just mindful that equity market will underperform, will not deliver return for 1 month, 3, 5, 6 year. And only when you invest in real estate, when you invest in equities, sorry, when you invest in real estate, when you invest in gold, we don't treat like those asset category like that. Gold in dollar term is up to down 27% from is high. Equity market is down from historical high by 10-12% in India. But where is a more hue and cry? Silver is down 46% in USD. Are we coming out and selling our silver in the market? No.
Okay, so next question is from Mr. Sandeep. Do you think that India should reduce capital gain tax?
No. India should focus on respecting entrepreneurs, respecting professional. India should create an enabling environment where making profit through legitimate mean is not looked up down by bureaucracy. India should look at exporting more. I think that will do much better than tweaking taxation. These are short-term solution. These are patch-up work. India need to focus on doing right thing, where we need to import less, export more.
A question from Mr. Santosh. Can you help me with what I'm doing is right? My son is 1 year and I want to invest in in his future. By the time when he is 22 years, I want to have a corpus of 2-3 CR. So can I go with full small cap mutual funds investment of 50K every month via SIP?
My brother is a cardiologist, so whenever I send any report of any patient to him, he get very, he is very wild with me. He say, I don't treat report, I treat patient. I need to talk to the person. The person need to sit across with me. I need to understand the person's psyche. How does he walk? How does he talk? Through that, I get a lot of things. And after doing all that, then I see his report and then I do a proper prescription. So my request to you, go to proper mutual fund distributor, consult with them, sit across with them. If you are not satisfied, go to somebody else, but invest through professionals.
Mr. Tipri has asked, some of India funds from SBI and Nippon are already investing in the US stocks or international markets up to 5 to 8%. So, is there a need to look for exclusive international or fund of funds?
I think this is a very good question. I think there are some fund from DSP which have allocation like DSP, multi-asset allocator fund have allocation. Similarly, you could look at the fund which have international portfolio. So you don't need to. So it has a flavor of precious metal, domestic equity, debt, REITs, and also international equity. So I think that could be a much better way of putting money to good use.
So Mr. Praveen has asked, mid cap index made new high recent times and small cap index is near to new high, whereas large cap for behind is behind new high. Small and mid caps are growing double digit, whereas large cap is still in single digit. So should we expect small and mid cap outperform large cap in future by seeing the above data?
See, the reason why large cap has not done well and available at 19p multiple is this that the FI is selling largely concentrated in large cap because FI's holdings, large holding is in banks, in IT company, in FMCG company. And if you see all these indices, banking indices, FMCGs, and IT indices, they are the biggest holding and they dominate 50% of Nifty 50. And that is the reason that large cap has not done well because there's a continuous selling of FI in large caps. So that is the reason. Okay. I believe that on the long term, this mid and small cap will do definitely much better than large cap. And as far as India is concerned, Nifty, just track Nifty, don't invest in Nifty. Nifty is a completely, in my opinion, is one of the worst perform indices and it will remain one of the worst perform indices. India's real story will come in Nifty 50, in mid cap and a small cap. Look at these three, but it mostly look at more actively managed funds and should have at least 7 to 10 year view while investing. Invest at different time period. Don't invest at one go. Expect more than whether I'll get 20% return, whether I'll get 15% CAGR. Expect that my portfolio will go down 10 to 20%. Expect that I will not have return for 2 years. उसके बाद क्या आप इन्वेस्ट करते हो? जब सी what happened when we do partnership with somebody. When we do partnership with somebody, the intents are always good. In the beginning, they are born homie, honeymoon period होता है. But when we do partnership at that time, we never think कि अगर हमारा झगड़ा हो गया और हमको अलग होना रहेगा तब क्या situation होगी. I think whenever you do partnership, also think of what happen if things go wrong. What we will do. Similarly, investing के अंदर भी return क्या आएगा उसके पहले देखो कि जर्नी क्या होगी उस रिटर्न की और मैं क्या इस जर्नी से कंफर्टेबल रहने वाला हूं. वो आपका सही है आंसर. गो अहेड एंड इन्वेस्ट.
Mr. Rahul has asked, reality sector is down by 23%. Can this be good opportunity in coming years?
Let that call be taken by a fund manager.
So can international investing help reduce overall portfolio volatility for Indian investors?
It may also increase. You never know. If the market, like we have seen, for instance, forget about Indian market. Uh, People do talk about asset allocation and say 50% debt, 50% equity. Suppose you're a Japanese investor and US investor, the 50% long bond has given you negative return. Okay. Because the interest rate went up. So it is very important you figure out at what valuation you're buying something. It's just not the question of diversification. More importantly, what valuation you're buying. If you're buying something at where expected profit growth over the next 3 to 5 years is going to be 100% CAGR, then odds are very honestly not. If you're adding more volatility rather than reducing volatility.
So Mr. Rohan, I've unmuted you. You can ask a question.
Yeah. Yeah. Good morning, sir.
Good morning.
Yeah, so just wanted to check two things. One is related to your perspective on Dubai or Middle East, that due to war and all those things, some happened. Those things are down. So how about these things to check as a global investing? And the other things is that there are some we see some kind of uh, global investing opportunities, courses or something, so that you can people can be enabled to do. So is there any kind of other ways we can do some investing secret or something like that? They teach some courses or something comes up certain business. So just wanted to check these kind of things, if those are required or not.
So I think everything is cyclical in investing. So Dubai real estate has a great run right now because of the challenge. It is going down through some challenging time. But I think in the long term, it is not a bad investment idea as far as Dubai real estate is concerned. But do a proper calculation, see what rate you're investing, what are the current annual income of average citizen is that, how many time it cover the EMI, rental yield क्या है, ये सब देख के फिर decide करो. And as far as international investing is concerned, it is extremely difficult. So have a good financial advisor who will help you, and that is the only way I would recommend you to go ahead. Tapanda, I'll take this last question, Tapanda ka, and then we close it. Sanika.
Yes, sir. So after that, only one question is left. We can take that also.
So Tapanda ka question ले लो पहले. Unmute करो Tapanda को. Tapan Kumar Chaudhary.
Am I audible now?
Yes, sir.
Ajay. Sir, just to can you recommend any international equity fund through our Indian AMCs, as you mentioned, DSP multi-asset allocation fund. Similarly, in United States and China, as we mentioned, any equity funds are there through our mutual fund, Indian mutual fund. I can invest in the equities of US and China. If so, what are those?
So right now, DSP multi-asset fund is a good idea.
Okay.
And second is you could look at, which I am doing for myself, for few of my clients, Edelweiss US Value Fund.
US
Yes.
Value Fund? Okay.
Yeah. So it is not into the mega seven, it is beyond that.
But US Value Fund through which AMC, sir?
Edelweiss.
Edelweiss US Value Fund.
Yeah.
Okay.
But
So
again,
I am.
Tapanda, talk to me separately about this. Never take advice on a public platform.
Okay, sir.
Yeah.
Okay, I understand.
Ah.
And may I expect, sir, some more advice from you for the coming quarter, July to September, for
Yes.
these foreign investment funds?
Yes.
Okay, sir. Thank you. Thank you very much.
Okay.
Thank you.
Yes. Thank you. Sanika? Teja Mohan ji hain. Just see. Sanika? Sanika, where are you?
Sir, I think I am unmuted. Good afternoon, sir.
Good afternoon.
So first, I'm Teja from Mysore, Karnataka. First of all, thank you so much for sharing your insights on something which is very important today, because everybody is undergoing this FOMO, fear of missing out, of not investing in international equities, because of your data-centric, approach in terms of, giving us insights. It was really helpful. Thank you so much, and you keep doing this, sir. We really appreciate this. A lot of value addition. That's the first point. Second point is, sir, you did mention that when you're investing in any asset class, you should look at the last 10 years average return. And if the current valuation is less than that, probably, you can look at investing because margin of safety would be more. And similarly, vice versa also. If the 10-year average valuations are higher than what it is today, probably we can still avoid, or maybe we could be cautious on that. So if you were to look at, say, large cap, mid cap, and small cap today in India, large cap seems to be undervalued compared to last long term average versus mid and small. So and also in terms of deploying money into equity now, considering the fact that negotiations are progressing well now, maybe things are better than what it used to be in terms of US Iran conflict. So if somebody has 100 rupees today to deploy, should it be staggered, or considering the valuations, especially large caps being favorable, should one get into equities probably in a lump sum way? That's the first question. Second one, sir, regarding gold and silver, you did mention that in dollar terms, gold has probably depreciated by 25% and silver by more than 45%. So should one look at having some allocation to gold and silver? If yes, what should ideally be the portfolio allocation into gold and silver at the current juncture?
So first of all, uh, Nifty 50 instead of Nifty 50, next Nifty 50 is better valued today. So look at that. Second thing, I think it's better to look at healthcare, banking, thematic fund than looking at anything else right now. So look at that idea. As far as gold and silver is concerned, still their 10-year yields are much higher even
Much
today.
higher even today.
So,
So,
so I would not,
I would not
look at
look at
investing
investing in those ideas
those idea right now. Ekta, can we close it now?
Sorry,
Yeah.
sir. Network just dropped.
So can we close it now?
Yeah.
So thank you very much to all of you for joining in. Really appreciate time. And we'll look forward for next episode where we are
we
perhaps
are
going
perhaps
to
going to talk about uh,
Mostly.
we are going to talk about asset allocation. Mostly we're going to talk about asset allocation, and we have some very interesting idea to take you through. Thank you very much.
Thank you, everyone.
Tanika, just stay on the call.
I'll just call you separately.
Yeah, okay. No, I'm saying that because will the chats be available for us after that?
Yeah, I think it is.
ठीक है.
You need something from the chat. I'll just call you one sec.
Yeah.